All right. Tom Lee is at it again, and he just did an interview recently and dropped all kinds of really powerful information that you guys need to hear. Sit tight. We're going to dive right in. Don't worry about smashing the like button or subscribing just yet. And don't worry about the Discord. We'll get to that in just a little bit after we listen to exactly what Tom Lee has to say. This is very important. It's about the stock market, what's coming up, the volatility. Let's dive in. Let's listen to what Tom Lee had to say very recently.
Bull market story still intact as Wall Street has largely avoided the seasonal weakness, as we were mentioning, of August and September, but a number of threats are looming, including, of course, the election 4 weeks away. Our next guest is looking past the headwinds and focusing on three tailwinds, including a dovish Fed, China's late stimulus push, and lots of cash on the sidelines. Let's bring in first CNBC contributor Tom Lee, co-founder and head of research with Fundstrat, and our very own Mike Santoli joining us as well. Tom, let me start with you. It was in April on this program that you said you thought the S&P 500 could close at 5,700, maybe even higher. Well, looky here. Look where it is today, right about 5,700. So the maybe higher part is still a part of your formula?
Yes, I think it's part of the formula because, bull markets are supported by strong fundamentals, and this is a case where not only has the economy survived extremely high interest rates, but the Fed is beginning to cut rates, and an economy that has sort of been languishing has been China, and now we have some stimulus and what looks like some bazooka policies that is supporting that region, and we have a lot of cash on the sidelines. So I think that this is a formula for stocks to do pretty well the next 3 to 12 months, and that's why we think that we would be well beyond 5,700 before year end.
Well, so Mike, Tom says tailwinds overpower headwinds here.
Yes, although I think you do have some offsets, and I think that even though the August and September, the advertised seasonal weakness didn't really show up in the terms of sustained downside, it did become a less rewarding market, right? You had more downside moves from that August 1st level than you had upside, at least during those 2 months. So I do think that reflects the fact that we have priced in a pretty decent scenario here. We're 21 times forward earnings on the S&P 500. I think a soft landing is pretty much what's underpinning that idea. That said, it's hard for the market to get into too much trouble when the Fed is easing into a resilient economy. And even though we're having to worry about maybe less Fed easing than we thought Thursday before we got this jobs report, I think that's a better formula. Economy holds up better. The only reason you'd worry about it is if you think the strong Friday jobs number was a head fake. And all of a sudden, it really was not representative of the economy being strong, and yet yields are higher, and yet oil's higher. We're benefiting from those things starting at very low points, under $70 crude, and then, 3.6 on the 10-year as a low recently. And so, therefore, the big violent vertical moves we've had in those areas have not really upended anything except maybe the housing stocks. But I do think, you have to be aware that we're 2 years into a bull market. That's often where it kind of flattens out, becomes a little bit less aggressive on the upside.
As our guest last week said, the third year is the hardest one often.
Has tended to be, yeah.
Tom, do you want to build on that and address what you should do with small caps here, why they've been so, actually, that's probably the one area we've seen the most weakness since the Fed hiked rates.
Yeah, small caps, they're within a few percentage points of an all-time high, and Mark Newton, our head of technical strategy, thinks we are still in an up move for small caps that just started recently. But yes, it's been disappointing. I think it's been especially disappointing because China and small caps historically are fairly highly correlated. And so we are seeing risk-on appetite increasing in some places. But I think it's just a matter of time. I think part of this is, between now and the next month, which is around Election Day, there's a lot for investors to digest. It's including oil prices, and the VIX is elevated. I think these are things that are hard for someone to say today, between now and early November, I want to be buying risk outright. So I think small caps still have good fundamentals. Earnings growth is accelerating. The median PE is 11 times, which is almost 7 turns lower than the S&P. So I think there's still the case to be made that small caps are starting a multi-year gain. It's just been very choppy.
As you look at oil, what would an interruption of Iranian oil supplies, which is really only 3%, as I understand it, of global output, what would an interruption of Iranian oil mean? Maybe not in economic terms, because it might not mean very much, but what it could mean psychologically to the market.
Well, markets don't like uncertainty, and oil is spiking not because of demand, but because of like what you're pointing out, Tyler, the risk of a disruption. And oil can move up quite a lot before it actually triggers the level of burden that causes a recession. That number is probably closer to $200 today, but it would be no fun for any consumer to see oil at 120 and gas prices more than double. So it's something that I think would be very painful for consumers just to see oil surge, and even if it's temporary.
So everything Tom Lee said was very important. I'm going to break it all down for you. There's a lot of information in everything he said. Before we dive into that, if you guys are looking to get better in the market, you're looking to be more profitable, maybe you want to retire early, for a full Discord training course and one-on-one coaching. If you guys show up very serious and committed to learn, I will show up serious and committed to teach you everything you need to know in order to grow your portfolio. I have students that started with 8,000 and within 3 months they have almost 20,000. Other students that started with 300K and now they're at 400K in 2.5 months. You guys can see on the screen all the profits my students have been making over the past couple of months, and this could be you. I've had people say that they don't know where to go to sign up. You go to investwithcorey.com. You can go to case studies to listen to the testimonials of my students, or you can go over here to training, watch the video, and put your information in to sign up and book a call with my team and I so we can custom tailor a solution that fits your needs. I don't have time to explain everything right now because this video is about Tom Lee. Everything you want to know is in this video. I will see you soon. About 4 or 5 months ago, Tom Lee explained that the S&P 500 would reach about 57 to 5,800 by the end of the year, maybe higher. We've already reached the 5,700 target, and it looks like there's more room to go. He also explained, which is very important, that the economy in the United States has survived high interest rates for a few years. We didn't actually go into a recession. Unemployment's gotten better. Inflation has actually started dropping like a rock from 3.5 to 3.2 to 2.9 to 2.5. Now it's going even lower. PMI data has been pretty stable with manufacturing. It's contracted a little bit, but it's been staying pretty much stable. Whereas PMI data for services is expanding and growing. And like I said, unemployment is down, jobs added is up. And it might seem like unemployment has an issue going on or that the jobs market isn't that good, but payroll data came out, it was good. And not only that, but it's just that it's growing faster than it should be. And we have a lot more people that are coming into the country, and there's more immigration, whether that's legal or illegal. There's just a lot of people crossing in, so there's more job workers available versus the jobs. There's more labor available than the labor market has. So when you start having more availability of people to be employed, you have more people to fill positions, but no positions to be filled or less positions to be filled. It seems like there's a problem there. But it's just the fact that the jobs market is growing a lot more rapidly than we expected. We also have a lot of cash on the sidelines in money markets, and they have not even been brought in yet. And there's almost $1 trillion in money market accounts, and they have not been brought into the stock market yet. They're still sitting on the sidelines even after an interest rate cut, and we're looking at another 25 or 50 basis point cut coming up in the next month or two. We're supposed to get 50 more basis points cut by the end of the year and 50 more in 2025. So when we sit here and think about that, we're kind of shocked to see that the money market money has not made its way into the stock market yet, which means there's probably a pullback coming because smart money won't invest in the stock market until we have a pullback. And with the election coming, that's a lot of uncertainty. The VIX and the volatility is up. We don't know what's going to happen. One day Nvidia is up, the next day Nvidia is down. AMD was up and down, then really down. Now it's really up. The market is everywhere. It's really volatile, and there's a lot of uncertainty in the market. And the market does not like uncertainty. We also have China. Besides the money on the sidelines and the fact that the economy over here is getting better, the Chinese economy, which is really tied to small cap stocks, which took a big hit during high interest rates, they are standing to gain the most. And they're tied pretty heavily to China and China's economy. You know, Chinese stocks and small caps heavily intertwined, and Tom Lee explained this. So because China got a stimulus and the economy is getting better over here, small caps do stand to gain the most. NIO, SoFi, Palantir, Enovix, Serve Robotics, they could all prove to be great investments. And there's other small caps out there that are just as good. And this video is not about that, but there's a lot going on in the market right now. But most importantly, we have to be really concerned with the fact that elections are coming up. There's a lot of bull run going on right now. In fact, we're in a 2-year bull market. Technically, the small caps are pretty close to an all-time high. Most small caps are nearing their all-time highs right now, which is also good. But at the same time, there's going to be a pullback, which is the same with the market. The market is going to pull back with the elections coming up. We also have to look at crude oil. Crude oil is over $70 a barrel. It's been climbing this last week or two, and longer than that, really since August. It's been kind of up and down, volatile, but it's going up. And with crude oil going up, this can incite fear to a degree. If the crude oil or the price of the barrel was to go over $120, gas prices would double. Tom Lee explained this, and that would be very bad. We would actually notice a pretty big shakeup in the stock market if crude oil hit $90 to $100. If it hit 120, things would pull back like crazy. It would be my guess that if we hit 120 with crude oil, the stock market would pull back about 15% or more. And not only that, if crude oil was to get closer to $200, which is what it would need in today's market to actually pull us into a recession, the stock market would just sink. It would be very bad. Like you would see Nvidia drop probably $80 or something very similar. Tesla would probably go under 160. Apple would tank into like the 150, 160 range, maybe even less. But I don't think that's going to happen. But crude oil can be used with the VIX. VIX and crude oil, gold and silver. If you look at those, it can kind of gauge a little bit of an idea or a little bit of a story beneath. If you're looking at futures and you're looking at the NASDAQ, whether it's micro or mini, and you're looking at SPY and the Russell or the S&P 500 and the stock market, the ETF, any of these you look at, and then you go ahead and you start looking at other data, you can compile it together to get more of a true picture. And really, honestly, the best way to do that is to look at the mini NASDAQ, the mini Russell, the mini S&P 500, and then look at SPY ETF. Then when you're done looking at them, you can look at gold, silver, and crude oil. This will give you a really good understanding of what's going on with the market. If the Russell, SPY, and the NASDAQ are pulling back and crude oil is going up and the VIX is going up, then we have a lot more uncertainty, a lot more volatility in the market. And with the elections coming up, it's not a good thing because it's uncertainty. So there's a lot of bull run going on. I think this is the hidden message with Tom Lee. He said it would hit 570 to 580. It did. And he said it could go higher, and it could, but there's a lot of uncertainty. So his hidden message really is to be careful because somewhere in the next 2 to 3 weeks, the market is likely to pull back. Maybe it won't, but it's very likely to pull back, and it could be somewhat aggressive. It could be a couple of days to maybe even a week or two where the market just starts selling off rapidly, and then one day, bam, 5% down, and then it runs after the election. You never know. It's very risky. Right now, I'm in an all cash position. I'm just kind of holding certain stocks, very few of them, and I'm looking to only hold safe stocks. I'm going to go over a couple of safe stocks with you. And in this exact moment in time, I feel like the following stocks are what you should be placing a little bit more confidence into. Palantir, Bank of America, Delta Airlines, American Airlines, PayPal, Block, Square, Coca-Cola, Kraft and Heinz. And you also want to look at a few other stocks like SoFi, maybe NEO, but very slim into NEO right now. But SoFi is really good. Verizon, Walmart, and Wayfair. You can also invest in Apple, but I would wait for a little bit of a pullback. Tesla and Meta, I would not touch right now. There's going to be issues with Robotaxi, which is why I am explaining to you guys to stay away from NEO right this minute. If anything goes wrong, when I say issues with Robotaxi, I don't mean there's going to be a problem with the reveal. I mean, there's going to be issues with the market with Robotaxi with volatility. If it doesn't go as expected, Tesla's going to tank. It's going to bring NEO and Rivian with it. If everything goes well, it's going to bring NEO and Rivian up, but it's kind of uncertain at this point. And yet again, the uncertainty along with the elections is not good. Right now, it's best to stay in good stocks only. Keep your cash in your account, make money on the interest, and try to limit your positions to no more than 3 to 5% of your portfolio in any one position or stock, and try to keep it to these safe stocks. This way you don't lose money. Once we have the results of the election, then you guys can start buying that dip right before or right after the election. Once the elections are done and everything starts to pull back up and start running again, then you are in the clear to make some good money. But right now, the way the stock market is, I really anticipate about a 3 to 5% pullback between now and the elections. It may not happen, but I guess you could say Tom Lee sort of alluded to that. He just didn't actually say it. He never came right out and said it, but he's explaining to that. Small caps are at an all-time high or near all-time high. China is uncertain, but has stimulus. This country has come out of a very big inflationary period where inflation has dropped and we're on a 2-year bull run. Rates have been cut, yet money from the money market and money sitting on the sidelines has not made it into the stock market. All of these things point to a pullback. The VIX is up, so this is going to probably happen. Pullback and then a run after the election. So I want you guys to understand this and make sure you're doing your due diligence, watching the market, and don't put too much money into any one position. If you guys are interested in becoming a better trader and you are looking to improve your portfolio, your performance, and you'd love to maybe retire early, I would love to help you. I offer a full Discord and training course to surround yourself with like-minded people just like you and I, and one-on-one coaching. Very serious mentorship though. You guys show up serious and committed to learn. I show up committed and serious to teach you. That's it for this video, guys. We will see you on the next one. Take care of yourselves.